Hello everyone, this is Teddy Keckstaff from Forex Trading Unlocked, and we are here on October 7th, 2020 with some Forex trading lessons for you, and we're going to see how the markets are. Real quick, we're going to put up our disclaimer to remind you that this webinar is for illustrative and educational purposes only, and that is it. So with that, we'll give you a quick plug for High Probable Japanese Candlestick Patterns. It's available in paperback and Kindle version on Amazon.com. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And don't forget to subscribe to our YouTube channel as well. We have the Forex-Trading-Unlocked.com website pulled up. We already pulled up the workstation page, and we have the euro up. Now, the dollar index had a little bit of a bounce back yesterday as the euro and some of the major currency crosses fell versus the dollar. And today we have the dollar on edge once again. However, we are failing to make a higher move high on the day, so I'm looking at yesterday as being a very good potential rejection point. One of the main reasons being is that if we take our current high from our head and shoulders, and we bring down the trend line, we did cross it on Monday. But then Tuesday we spiked higher, and now we're still above this. By attrition, we're coming through this downward sloping resistance line, keeping the current downtrend at bay. However, unless we get a rally above the last higher move high, which would be here, or lower move high, above 1903, we are still bearish. So below this line, we are looking for a corrective move lower still. All right. And for a continuation of the longer-term downtrend that we've been establishing since the beginning of September. So something to key off of would be this rising support line right here. So we're kind of at the crossroads right here. Now, I would expect that today, after the U.S. markets open, you'll probably see a little bit of the U.S. dollar under pressure. We have oil numbers and a bunch of other things coming out, and we'll see how that reacts. But I would definitely key off of the high from yesterday. Above this still has the bulls trying to press a rally, but I would be very careful about being overly bullish at these levels. Right now, it looks like the dollar has a really good chance at becoming a bull again. So let's look at the British pound US dollar and see what the second biggest component of the dollar index is doing. Right now, the euro has the index under pressure. The pound, as you can see, took a hit yesterday, and today is barely up. And this is another reason why I think we're going to get this more of this follow-through to the downside. The high of yesterday, I would use that as your breakout trigger for the British pound US dollar. Below that, I think this market is done with its corrective move higher and now is ready for a sideways to lower trade. The fact that today's bounce is not that extreme versus the euro helps to really help solidify that potential reality to manifest itself. This low that was set back in September at $1.2675 definitely contains the support level. Anything below here would be very, very bearish for the British pound US dollar. And yesterday's rejection, this here is a bearish engulfing line. Now, it had taken 9 days to get there. It takes 5 to 8 days for any pattern to really be remotely effective. Otherwise, they're just not valid. This fits that criteria. So since we have a bearish engulfing line here on the daily, that tells me that odds are that this market will remain under pressure. Now, let's go back to the euro US dollar. So we have the two major components of the dollar index that are higher today on the day, but yesterday they came back in a big way. Now, as we had the bearish engulfing line in the British pound, here we have, let's just get rid of this one. We don't need this anymore. This arrow here on this high from yesterday, this here is dark cloud cover. So this is the short-term sell signal as well. So since we have a sell signal in the euro and a sell signal in the pound versus the dollar, let's look at the US dollar Swiss to see if we have another European currency confirmation. Now remember, the euro and the pound are the two biggest components of the US dollar index. What we have here, here we have another short-term buy signal. And if you want to learn about these signals, read the book High Probable Japanese Candlestick Patterns, and you can learn how to utilize these signals and trade off of them. So right now we have, once again, as of yesterday, a short-term buy signal in the US dollar Swiss. This is, considering the break that we had, confirming the end of a corrective move lower, which would help to maintain our short-term bullish trend. Now, we're not major bulls here for the Swiss. Now, remember how the euro had penetrated that downward sloping resistance line? This upward sloping support line is pretty much the same thing for the Swiss, but it's the Swiss versus the dollar, not the euro versus the dollar. That being said, this didn't violate, and now we're finding strength here. Now, it's only slightly lower on the day, but this piercing line here, buy signal from yesterday, I would have to, in the short run, use this as a guideline and a baseline for you aggressive bears. Only if we fail from this last low from yesterday would I see us really getting a continuation of the downtrend that we've had over the past week and a half. Otherwise, I see this as now forming a base for another rally higher. So right now we're looking at the potential for dollar strength to leak in. Let's look at the US dollar Canada. This has been a grind higher off of its lows from September 1st. As you can see yesterday, this as well had a nice short-term buy sign. Now this is a grind higher, this market. Not looking for any major explosions to the upside or even the downside, even if we were to have some sort of a reprieve. I got to move this over a little bit. Okay, let's move this over to there and move this down to, well, we can even put it right here. So let's just say that we're going to use the low of yesterday as our base for continued bullishness. Anything off this low from yesterday keeps us in a higher move high, higher move lows, which is indicative of what? A upward trend. So I think that this is going to continue, especially if we start to see dollar strength come into the European currencies. So we're getting these echoes of dollar strength coming across your broad-based currencies. The US dollar Mexican peso is in a big sideways chop. This one also, I would say that as of yesterday, even though it's negative today, key off of the low from yesterday as your basis point for support. Anything below that would be bearish. Anything above that has us in a short-term neutral to higher outlook. Now let's look at the US dollar Japanese yen. Now usually the US dollar yen a lot of times tends to go in the opposite direction of the other major currencies. So today the dollar's under a little pressure. Obviously, US dollar yen, it wasn't under pressure today. It's been actually higher. So this little bit of strength is actually the natural divergence that we see when, remember, all the currencies don't trade in tandem against the dollar or with the dollar. So this is what's going on right now with the Japanese yen. I expect this right now to be a short-term top. Remember that this is in a bear market, so making higher move highs and higher move lows in the short run. This is viewed as only a corrective move. I would key off of this low that was set a few sessions back. Any failure from here would have this market as a bear. Above here, it's neutral to higher, but I would use caution here because unless we take out this last higher move high or lower move high here, we're in a sideways basing trade at best. So only above this level here at 106.577 would I say that begin to think that we're going to have a true bullish surge that's going to continue for the US dollar yen. Especially if the US dollar is gaining on the other currencies, I would say that you're probably likely going to see a neutral to lower trade with this one. Now, for the AUD USD, when we go to this other currency in the Asiatic trading zone, this one is under pressure. It's had a nice corrective move versus the dollar, but this one's had more trouble than the other ones. And especially since we had the sell-off yesterday, I would have to say that this is probably a good sign of the continuation of the downtrend and that today is just a little profit-taking bounce before this market goes lower. Overall, this market has been trending lower now for the past month and a half. I think that you have to maintain that posture, this bearish posture. Now, the New Zealand dollar, US dollar, is in a similar way as the Australian dollar, US dollar. And ZD USD, let's get this correct. So far, no questions on the chat room. If you have any, let us know. And remember to check us out at 9:40 on tfnn.com for our weekly Wednesday um, interview spot where we talk about the Forex markets and the broad markets and their implications on the equity markets and other markets around the world. So the New Zealand dollar, as you can see, is slightly higher than it was yesterday. Had a nice little sell signal yesterday, and I believe that you're going to get another continuation of the same. I would use this high from yesterday as your pivotal key point for bullish and bearishness. Anything below this keeps this market bearish. Anything above this would have us on the neutral posture. Not necessarily bullish, neutral, but because right now we are in a negative posture with the New Zealand dollar, US dollar. Now let's look at the US dollar, Turkish lira. We're going to end on this one as far as our lap around the globe to show you how this one is piercing higher even still. So in the wake of having a little bit of weakness in your majors, once again, your middle currencies and Turkish lira is not a middle currency. It's not really thought of by many as a big currency, but it really is. It's your juncture between the Middle East and Asia. It's along the Silk Road. And it definitely is a good indicator of where true dollar strength is globally. Now, the majors, remember, there's all kinds of reasons that'll have those go up and down versus the dollar. But as you get into your lesser currencies, they don't have the strength or the size to even remotely compete with the bigger currencies. But they do have, especially when it comes to flight to quality, the dollar as their benchmark. And as you can see right now, the Turkish lira is being continuously suppressed, meaning dollar strength, odds are, is going to remain in the environment. So let's go back to the euro US dollar where we started today. And as you can see, it's really not doing anything. Of course, it's only been a few minutes since we started this webinar. We are coming into the opening of the U.S. markets. I would expect that you're probably not going to see too much action in the currencies initially. And if anything, like I said, I'd be very leery as far as upside potential today. I don't think you're going to have a chance at really making higher move highs on the day. And unless we take out that high from yesterday, I think it's a good indication that we're going to see this market sag into the rest of the week and heading into the weekend and into next week. The direction overall right now, we have to be bullish the dollar just because of the interest rate differentials and a lot of the geopolitical things that are finally coming into fruition. Remember that Brexit is still going on. We're going to start to talk a lot about that next week because the timeline is ticking and there's a lot of events that are coming up soon. So until that, there's no real reason to get too involved with that. So that's a little foreshadowing for what we will be talking about next week. Remember to check out forex-trading-unlocked.com for all your Forex needs, and also to subscribe to our YouTube channel so that you can find out what is going on in the Forex world. Now, we do have one quick question about gold versus the US dollar. Now, gold is actually a big indicator of where the dollar is going. Here's another one I think you have to look at. Just like we've had these moves in the currencies, look at what we have here. We have a sell signal in gold yesterday. This market has been trending lower, conversely to the dollar, and I think as long as gold remains under pressure, that you're going to see more of the same. And the likelihood of this to continue is very, very good. Look at this downward sloping resistance line. We came right up to it and sold off. This, I think, is definitely your barrier. If we get a reversal in gold and the metals and the CRB index starts to climb, then you may see a little depreciation in the dollar as money shifts. But I think that as we are heading into to the very first stage of the first quarter, it's showing that profit taking is something that everyone's looking to do, and that's what's happening. So any major trends that we've had globally, whether it's interest rates, metals, grains, even currencies, I think you're seeing a lot of rebalancing and profit taking because people are so much in uncertainty heading into this fourth quarter that any potential upside gains you can show, I think people, the fund managers are trying to grab onto right now because they may be hanging in the towel after the election or going into Christmas time to see how things shake up with things. Remember, we are looking at a potential second wave of COVID. It's kind of weird. We have second waves around the world in certain places, and in other places there's nothing happening. And then we have extremes like what's going on in Australia, which is another reason why their currency is probably going to remain suppressed. Their lockdowns are very severe. They have very few cases of a COVID resurgence in Australia, but they have lockdowns that are incredibly severe and are crushing businesses everywhere. So I would definitely think to that in the longer run, you can expect to see the quarterly numbers for Australia really take a dive over the next 6 to 8 months. And I think that when we come into the summer of next year, that we will be talking a lot about the struggles of countries like Australia economically and where their currency is. And it will be a reflection of the things that they have done in the midst of the coronavirus and how the globe has reacted to it, and then how their trading partners have reacted to it as well. So a little bouncing gold going on right now. I don't think that that's going to last. I think that it's just short-term profit taking before the bears start to really romp on that once again. And then we have the euro US dollar once again we're returning to. We're hovering here at 117.75. Expect nothing more, really, too much, I think, today on the action, and look for the bears to come back in a big way. So once again, please check out the book High Probability Patterns on Amazon.com in Kindle and paperback version. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. We pointed out a bunch of these patterns. They are happening as we speak, and we will see how they react over the next few sessions. So we now have a directional pivot point that was hit yesterday. We're looking for dollar bulls to come back in the major currencies, and we will see what happens over the next couple days. And as we stream this repeatedly again in after this episode, we will have it streaming live once again and repeat on our YouTube channel. Please leave any questions, just like the others have before, and we've answered them today, and we hope to answer more as we continue giving you information on the Forex markets. So definitely have a good trading day, and we will see you soon. Thank you very much. Appreciate it.